here is a thought. This came to me it was either on a long walk or I was washing my hands or something. I don't remember. It was in a moment of like my mind was on something else. But I have been doing a lot of trade reviews for three specific people in the room, and one thing that has come up a lot in those trade reviews, and it's really all the trade reviews I've ever done since we started this place, is one of the things that is one of the most common like problems or errors, or however you want to phrase that. One of the most um, parts of the trading practice where I review that certainly isn't contributing to like conclusively consistent profitability or desirable outcomes is this same thing where for whatever reason, we come up to a level and someone is basically they're realizing sort of a loss, a big loss for themselves, so that even when a signal resolves and they were basically operating at the zone they sh they should have been, they're already digging themselves out of a loss that they realize. This is the same thing that happens in investing a lot. You'll go up, the market will go up, and then it'll have a normal 15 to 20% correction. The S&P 500 corrects 10 to 20% in almost every year. It's not a bug, it's a feature of stock market volatility. They return more than bonds because they're more volatile by some metrics, not by all. And an investor will sell down 15%, and so that when they rebuy the all-time highs, they are worried about corrections, they are worried about bear markets, but they realize for themselves a correction, and that didn't really happen if they had just held. This is what we see. Like we always tell people, you need to use a certain kind of stop if you're working a certain level with a premium outside level. An inside level, you can use like a dynamic inside stop, and of course, you're always wanting to get your risk and reward as low as or as high as possible, risk as low as possible relative to reward. But what I see over and over and over, we come up into a zone and the person probably knows they should be using a 10-point stop in ES in this environment, like literally historically volatile environment, 100-point 20-day trailing ADR, but they get in on a bar and then something happens in here and they take a 3-point stop. And they know damn well, like trading ES in this environment with a 3-point stop, it's like literally you would never find a winner. It's just the normal harmonic rotation, the normal zig and zag of ES right now. ES could hiccup, like someone could drop a newspaper and ES will move 3 points, like in this environment. So like this person knows, or even like a 6-point stop on a premium outside level, they're realizing a quick 6-point stop. And so what their execution chart will look like is in, out, in, out, in, out, in, out, in, out, and then they'll catch an 8-point winner here or a 30-point winner, but there's 15 points of losses here or 20 or 11 or whatever. So I'm getting somewhere with this. I'm saying this for a reason. This is very, very important. This is the most common mistake I'm seeing these often these days. It's different. Like I'll use price action. So you might see you might see some sells and then a buy and then another sell here and then some covers. Like you might see some blue and pink on my execution charts, but it's never going to be like I'm using price action to scale up and scale down my size based on the reversal process. And like we stay flat and hold surf and everything. Maybe you see I'm covering some, getting ready to adjust my expectations and so forth. But I'm never realizing an entire loss with just completely random trading. Like we come down to a key level and NQ, I'm never like in full size, realizing a 20-point loss, in full size, realizing a 20-point loss. This is one sequence for me. It's one trade. I've got a 30 to 50-point stop in NQ, whatever it is relative to the environment, but also just like local information. Like, is there information recently that we can use to identify where the trade would likely be wrong? And can we get a little tighter than 30 to 50-point stop? If you're just kind of just random trading, you're going to be taking 10, 20-point stops. Academically or theoretically, like 10 points in NQ right now is a hiccup. It's a bar. It's a range bar. You might have a 5 range bar do 10 points in NQ right now. It's a rounding error. It's like the dust that comes off of a pie crust. It's nothing. But because you're random trading, basically, you're realizing 10 plus 20 plus 10 plus 30. And then you catch the same 60 to 200 point NQ long that I did, but it's nowhere near the same trade. Okay, so why do I say all of that? There's two reasons, and this goes back to what we were talking about with Drew and his oh, your mind kind of, I missed a trade, da 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 da. I think two things are happening. Something comes down to a level, and there's all sorts of mental stuff going on while this. It's the market's job. There's all sorts of mental stuff going on. Two main things, I think. One is you actually don't know, and they have two very different functions or paradigms or sources. One is you don't actually know for yourself if this is a premium place to get long or short at all. Like you think you've put in the work, but you haven't actually, like what we call it building belief. If you've actually gone back and back tested or actually traded using the same tools for 10 years, you actually, even if it's wrong, you'll have an actual sense of what you believe. You'll have built belief in the set of tools or the levels in front of you. Building belief, right? It's a function of hard work, effort, back testing, all that stuff. So that's one of the things that's happening is when price comes down or up into a level, bias it could also be here. Like something could come down into a premium level, and either you haven't put the work in, you haven't built belief, you haven't done the work, or you didn't prep enough. This could be prep, effort, watching the course or someone else's course that has a set of tools you believe, some course, some curriculum of skilling up in something. Bias is another huge thing. Like if I have a huge bear bias, something could come down to a key level that I have prepped for, I have assigned the curriculum for, I have skilled up from a methodological perspective, but then this little bad boy comes in and it's like, do you really want a long when you know we're in a bear market? So this is that first thing is you don't really, like we come up into this short and you don't really have the tools or the acumen to say for yourself, no, this is like, even if I get stopped out here, that's the way you should feel about a trade is if I look back on this and I just get completely blown out without one tick of favorable excursion, I would smiling go to that same doom again because you know that like the poker analogy, there's no question like if you play aces and you just get trounced by some newbie with deuce seven, like it sucks, it's a horrible bad beat, but you'd never text me like, man, I got to start playing aces differently. No, no, you would never do that. You would, the next time you get aces, you're thanking the dealer, you're thanking your lucky stars. Do the same thing in trading. Actually find, even if it's just one setup, like one, maybe you're so long biased you can only see a cont long, you only take cont longs. You're so long biased and you're so not a mean reversion trader that you can't see that this morning at 9 a.m. Eastern was as high risk reward, as high probability as basically it possibly gets. I mean, it's just staggeringly, but you can't do it because we're going down into it. Like you need a move up before you get long. You need that continuation type of paradigm. Great. Then there was one trade for you today and you know it well enough and you build the methodological adherence to it so like if you're a long biased and continuation biased trader, today at 11:30, like today at 12, whatever this SRT was, you recognize this. Like if this setup happens 10 times, even though you lose, sometimes you would go grinningly into it the next time. So when we come up into a setup that isn't yours, you actually don't have any confidence in it. You haven't prepped, you're biased out of it, you're self-selecting out of the setup via bias. Something is going on in this first paradigm. The second paradigm is really big too, which is just loss avoidance. Sometimes, remember, the unskilled gambler or the unskilled speculator is obsessed with losses. What the skilled gambler or the skilled speculator knows is that losses are a negligible stepping stone, a negligible and welcome and ultimately meaningless sort of stepping stone on the way to the wins. Like if you're doing this right, 1R, 60 to 75% win rate, and you get 2 to 4R winners, like you would actually, the losses, it literally is just the cost of doing business. Like no fruit stand is like, man, banana peels are expensive to dispose of. Like that is literally just, you signed up to do a fruit stand. Like welcome to your own gig. This is the way you should be. This is the way any winning trader, any conclusively consistent trader is saying it's just a one little 1R cost of doing business. But what we see in people that haven't skilled up is you don't want to take a loss. Dave often quotes the Michael Jordan thing of why would I worry about taking it? Why would I worry about missing a shot I haven't even taken? Michael Jordan is not loss avoidant. He has success because he's not worried about missed shots. It's part of the same paradigm. And so both of these things, like two pistons in an engine, are at work. And I promise I'm getting to the commentary with Drew is the big nugget here is I'm about to say it. I think this is what hit me in wherever I was, shower or walking or whatever, is you come up to a premium level and one of the two or both of these engines of friction or and distortion are happening. You don't really have a method. You don't have the belief. You don't have the study. You don't have the curriculum. You don't have the tools, the execution paradigm, like literally mechanically, how do you press the buttons? You don't actually believe in this level. You could have heard Dave say it on the PMP that this is a huge level, and you very much know that Dave is a incredibly successful trader by any metric. You maybe heard Tim then agree that it's a huge level, and you have some degree of respect for Tim and his craft. Perhaps your two best trading friends also identified it, but when we get up there, like you don't actually believe it like you would believe your one beloved setup, or you believe in the broken things that have led you not to be a profitable trader, because an unprofitable trader is acting on things. He does have belief in something. He has actionable beliefs in something. They just aren't the right things if the metric is to make money at trading, which it should be if it's not a broken paradigm. So the second thing is just not wanting to, like, I don't want to take it because it could be a loss. So you're not viewing a loss as a welcome, negligible stair step to a profitable trading practice. You're like, I don't even, this is what happens with traders. We have traders sometimes that won't take trades at all. There's a couple in the room, like they struggle to even take any trades because you have 10 trades, and even if the outcome of 6 of them is wins, the outcome of 4 is losses, and the part of that brain wants to avoid this pain. Even if this is net 3,500 on the week, that's great money. Your brain is still like, I don't want to pay. I don't want to get paid 3,500. Like, would you get paid 3,500 for me to cut off your pinky toe? Probably not. That's what your brain is doing here. It's like, okay, this is great, but this sucks so bad. But that's a broken paradigm, because this is 4R and this could be 20 or 30R. So both of these things are working when you come up to the level, right? You're not actually sure about the level because you're not equipped to. You didn't really prep. You didn't really watch the course twice. You don't even know that the resource library has 200, whatever it is. And you, in some way, perhaps you are just you're not wanting to take the risk, the opportunity, because it could result in a loss. Risk is uncertain loss, right? You don't want to sign up for you don't want to realize the potential for uncertain loss. So what happens here, there's a lot of friction, right? There's a lot of stuff going on in the psyche here. There's a lot of tension in here, all this stuff. So what happens when you have a PMP zone or something, like Dave was saying, there's some nice confluence there at the highs. There's a ton of stuff in air pockets as well. I was in total agreement with him on not taking it. But yesterday I was saying I didn't really see a short signal when there was a pretty nice one. Some stuff dick for ticked, but it was still a lot of evidence. Okay, so what I think happens is when you see the response to this zone, your brain needs somewhere to put all the negative energy from all this like uncertainty, and like there's like this bubbling energetic kind of a lot of information and doubting and uncertainty, and you sort of know what you should be doing as a trader. So once you come up and then you see the poker hand play out like it should, like you see the aces or the kings or the queens or whatever, when you see that response, it needs to transfer all this stuff somewhere, because you know a set of things, but you're acting on a different set of things. You know, like, this is a nice confluence, but you don't have it like viscerally dialed in so well, or this is happening. And so I think you get a response to the level, and then so the brain takes all this energy and now it plays like a totally different trick on you, which is thinking that signals really ever are over, like just like that, because you didn't actually believe enough, or you weren't equipped enough or prepared enough, or you wanted to avoid losses, which is a wrong thing so much. And so when you see it play out, your brain is like acknowledging the facts. It's shifting out of the broken energy into the hindsight. Like, hindsight makes it possible to see, okay, because in advance you can't, these things are too much. They're too much of an impediment to see it in advance. But then the signal resolution happens, and you're like, then the brain starts unpacking all this stuff. You're a super bull bias trader. Part of the reason you didn't take that signal. It's a premium short. You are loss avoidant. You didn't prep. You haven't built the belief in let's say it's a symmetrical extreme. Do you really know what that is? Like, you've heard me say it's the most powerful thing in the system 10 times, but do you actually know what it is? What is it? What's a symmetrical extreme? And draw me one, right? Because if you knew that, you would never avoid taking one. Like, if you knew what the actual odds are on that, you'd never avoid it. So your brain stuffs all these facts and truths into this like negative energy, and then you see this happen, and then through hindsight it like takes all these things out, but it needs somewhere else to put them. It needs somewhere else to put all this bullshit, like this negative energy. And so I think that that's where it goes into, is like, okay, now I missed it. It can't go from like the broken paradigm that you were operating on when you didn't take action at the right information. When you see the right information resolve like right information does, like when you see the right way to crochet result in a beautiful crochet, or when you see the right way to bowl result in a strike, or when you see the right way to bird watch result in a beautiful sighting, whatever. It needs to take all the reasons you didn't do it and you put it into something else. This can be like people do this with excuses, like, oh, da da da. Someone brought a drug to the party, or like an addict will have a million excuses of like, oh, yeah, they gave me rum. The alcoholic, oh, they gave me rum. They can't, rum's trouble, man. I can't drink. I can do anything else. I can drink. No, you're an alcoholic. It's not the rum, Steve. You're a drunk, right? So we take all this negative energy and we put it into this thing, which is, we know, it goes back to like the things we know and the things we act on. We know, like if you don't know, it's only going to take you 30 minutes to backtest it. This is 1 in 20 reversals. The other 19 are like this. And even if this is 20 minutes, but sometimes it's 2 hours. So coming up to a signal, you like premium level here, there's things you know you should act on, and there's those two broken paradigms. So your inaction leads to that. These broken paradigms, in hindsight, you now see you didn't take the correct action. Your brain takes all this negative energy, now puts it into a new incorrect paradigm, which is, okay, now you missed it. You didn't even believe in it enough to take it, and now you missed it. Think of how broken that is. Like, you completely do not have the skill set or the opportunism or the understanding of what a correct loss is to be there at the initial moment. And now your knowledge that this will almost certainly do this, now that gets subverted. Your original skill set of that this is the right time to take action got subverted by these two things. Then this happens down 20 points, and your brain is like, shit. Here was what I acted on. Here is what I know I should believe. What should I do? Okay, now I need somewhere to put all this shit. Okay, now I missed it, because what you know you should act on is, I likely have 45 minutes to take this level. But what your brain knows is, no, you won't, because when it gets back up there, now it's back to the first two things. You follow that? Like that's the wretched thing that an SRT is in auction markets. You're not equipped, and you don't believe in your own tools, and you haven't done the work to want to take action there. Price reverses, and so in hindsight, it confirms the thing you know you should have done. This gets transferred into another broken paradigm of, now the opportunity's gone forever, and when we come back to the level, it'll put all that energy back into the first fucking two broken things, which are, oh, it's holding up really well. Second test, whatever it is. And so it's right. So you'll just, this is why I think a lot of reversal processes like the div and everything, they look like this, is there's this, for an unskilled, for someone who hasn't skilled up in these ways, this is a really painful process. Inaction because of wrong beliefs, hindsight shows what they should have done. Energy funnels into, okay, now there's no opportunity at all. Opportunities granted again. The old two paradigms, unequipment or loss avoidance, take over, and so on and so on and so on. You throw in two losses in there. Let's say you realize that this by here, you realize that all this shit's happening. Oh, I'm just going to get involved, stop, and then that happens. You're basically a traumatized child at that point. Your brain has done an entire football game with itself. Now you're down 1,300 and you watch the market go up 200 points. It's like, that's trauma shit. That's like watching your spouse cheat on you. Like, that's hard. That sucks. And then you throw in that every day for a year. That's you get how this is so hard. If you don't honor the right paradigms and see some of this stuff, like that's what's going on. Inaction, that's I think what comes into that. It's like, I think Drew was saying, I missed the long, which he had reasons to it. Miss the long, great, come up, and then we get to a short, doesn't take it, and now it's like, I missed it. Well, you know it's always going to do this. Even if it doesn't work, it's going to do that. So anyway, I hope that made sense. It wasn't just rambling.